out with some of your friends. You guys get hungry. There's so many places you could go to get food. If you want a Mexican, you could go to Chipotle. If you want a pizza, you could go to Pizza Hut. Maybe you want burgers. There's still 100 options. You can go to McDonald's, Wendy's, Five Guys. But today, you want something quality. You decide to go to Shake Shack. Hello, my name is Aiden Walter, and I will be presenting Shake Shack as a buy pitch, also known as SHAK on the New York Stock Exchange. Shake Shack is a fast casual restaurant chain that specializes in high quality burgers, fries, and shakes. The company operates through three main segments, which are company operated restaurants, licensed restaurants, and shack sales. Company operated restaurants account for the majority of their revenue. It's where it directly manages locations across the US and internationally. Licensed restaurants are operated through partnerships in different regions, including international markets, with Shake Shack earning royalties from their sales. Shack sales also contribute to the business, including the sale of food and beverages from its restaurants through retail partnerships. The founder of Shake Shack was Danny Meyer in 2004, only about 2 miles from where we sit today. The president currently is Rob Lynch, who is also the CEO. Before he joined Shake Shack, he was the CEO and president of Papa John's, which is one of the biggest pizza places in the world. Shake Shack has 579 restaurants in 79 countries, along with 315 of those being in the US. It's a recognizable brand and is also a growing brand. The US remains its primary market, but the international growth is a key part of the expansion strategy. Institutional investors hold a significant portion of the company's stock, with firms like Vanguard, BlackRock, and State Street being the top shareholders. So my investment thesis. Shake Shack has a very unique business model, along with a very strong competitive edge and huge growth potential. The competitive edge Shake Shack has is focusing on premium ingredients instead of using cheap stuff to keep prices down. Also, a unique dining experience, which stands out. The brand's commitment to sustainability and freshness has built a very loyal customer base, while its investments in technology, such as mobile ordering, help maintain its competitive position. The business model Shake Shack uses is a fast casual dining experience with both company-owned and licensed restaurants. It allows for flexible growth across the US brand and focuses on high-quality ingredients for a consistent customer experience. Signature items like the Shack Burger help drive brand recognition and expand into new markets through digital ordering and retail partnerships. So you could say Shake Shack is smashing the competition. With a growing demand for fast casual, they have competitors such as Five Guys and In-N-Out, who are also fast casual. They stand out by offering higher quality food, a better customer experience, and a very strong brand identity. Unlike typical fast food, they use all-natural, hormone-free beef and fresh ingredients, along with a signature Shack sauce that sets its burgers apart. The brand creates a more inviting dining experience with modern restaurants and easy digital ordering, which makes it more convenient than many of its competitors. Beyond great food, Shake Shack has a loyal following, thanks to its commitment to sustainability and limited-time items that keep things exciting. While other fast casual chains stick to the basics, Shake Shack continues to expand globally and improve its menu to give customers reasons to keep coming back. If you look at the graph below, in just a span of 8 years, Shake Shack has went from around 50 locations to almost 600 now. So Shake Shack's valuation, it is currently $90.70. It is a market cap of $3.86 billion and a revenue growth of 14.8% year over year. It is a 52-week range of $77 to about $140 and a PE ratio of $381.88. If you look at the graph again, the revenue increase is almost 21% from year to year, which is well above the industry average, being right around 13%. Shake Shack is trying to incorporate AI by embracing technology and automation to improve efficiency, enhance customer experience, and support expansion, which is one of the key initiatives of the introduction of automated kitchen technology. Features like automated grills and fryers help maintain consistency, reduce wait times, and improve overall food quality. It ensures that every burger and order of fry meets Shake Shack's high standards, even during peak hours. Additionally, smart inventory systems help track ingredient levels in real time, reducing waste and ensuring the locations stay very well stocked. A standout innovation for Shake Shack is its mobile kitchen carts. They allow the company to bring high food to high foot traffic areas and events without needing an entire restaurant. These compact, high-tech carts are designed to efficiently serve fresh burgers, fries, and shakes in places like stadiums, festivals, and even city streets. By helping Shake Shack expand without the cost of a new building and while maintaining the same quality, that customers expect. By investing in technology and flexible service models, Shake Shack is positioning itself as a leader in the fast casual industry. So ESG for Shake Shack is very, very good. Environmental, social, and governance is right around the 80% mark, which is way better than McDonald's, Burger King, and Wendy's, which all sit at about around 60%. A company almost as high as Shake Shack in the ESG score overall would be Chipotle, which sits at about 75. So if you look in the environmental front, they prioritize by using cage-free eggs, antibiotic-free beef, and even eco-friendly packaging, which heavily reduces its impact on the environment while still maintaining high-quality food standards. From a social perspective, they foster a culture of diversity and inclusion, ensuring fair hiring practices and leadership development programs that create opportunities for individuals from all backgrounds. The company also emphasizes employee well-being, offering competitive wages, career growth opportunities, and comprehensive health benefits to support its workforce. In terms of governance, Shake Shack upholds strong corporate responsibility by promoting board diversity and ensuring that leadership reflects a broad range of perspectives and experiences. The company also prioritizes data security and privacy, implementing robust cybersecurity measures to safeguard customer information and maintain trust. Some risk factors for Shake Shack could be intense competition from fast food chains, along with rising labor costs and investor sentiment. Ways to mitigate that would be staying ahead of the game with better meats and service, keeping employees happy, and emphasizing premium quality ingredients and strong brand loyalty. So Shake Shack isn't just competing with local burger joints. It's up against massive burger brands like McDonald's, Five Guys, and In-N-Out. These chains have huge marketing budgets, lower prices, and way more locations. By standing out, Shake Shack leans into what is special: high-quality ingredients and a unique brand experience. Instead of racing to open thousands of locations, the company is carefully expanding into high-traffic areas, both in the U.S. and internationally. Digital ordering, partnerships, and mobile pickup options also help Shake Shack reach more customers without sacrificing quality. With minimum wage increasing and all other high labor costs around the country, running a Shake Shack is not cheap. Instead of cutting corners, the company is investing in smart automation, like self-ordering kiosk and kitchen technology that speeds up food prep while keeping the quality high. Shake Shack knows that happy employees remain loyal, which is why it offers competitive pay, strong career growth opportunities, and solid benefits. Shake Shack's stock can be a bit unpredictable, which can worry some investors, along with its high valuation and growth expenses. But the company is in it for the long game. By opening locations in the right places, managing costs wisely, and building a strong brand, Shake Shack is showing it can grow sustainably, which is also focusing on social responsibility, like sustainable sourcing and diversity initiatives, which can appeal to modern investors looking for more than just profits. At the end of the day, Shake Shack isn't trying to be the biggest burger chain. It's focused on being the best. By staying true to its brand, using technology wisely, and expanding at a smart pace, the company is setting itself up for long-term success. Some of the corporate strengths it has are the premium and quality ingredients that it uses: high-quality buns, locally sourced produce, hormone-free beef, and ensuring more flavorful and healthier meals than just normal fast food places. Having bigger portions, along with being higher quality compared to just some other fast food chains. A very, very enjoyable taste, which is almost gourmet, considering it's a fast casual dining, being made to order, and having a more expensive dining experience, looking more modern than other places like a Burger King. With a very creative menu, shakes, and seasonal specials, you get more of a choice than just having the same old thing every day. So for final summary, Shake Shack has a very high valuation relative to the industry, but the growth potential supports a buy recommendation. The growth outlook remains strong, with a conservative expansion plan targeting 850 locations worldwide, while maintaining a 20% restaurant level margin despite rising costs. Steady 4% same-store sales growth suggests continued customer demand, while delivery revenue is expected to remain a smaller part of the business. In a bull case scenario, Shake Shack could reach 1,000 locations and improve margins to 22%, driven by optimal efficiency and strong expansion. On the other hand, a bear case scenario assumes the slower growth to 750 locations with 18% margins, reflecting higher cost and economic challenges. Ultimately, Shake Shack's stock price is projected to range between $95 and $120 per share, offering a potential upside of 22%. This forecast underscores the company's ability to scale while balancing cost and competitive pressures, making it an attractive investment opportunity.